Okay, let's cross over to New York now, where Michelle McCorry is standing by. We're going to take a look at the eco picture in the U.S. in just a moment. But first, we have some breaking news on what appears to be an FBI arrest. Michelle.
That's right, Paul. We just have news crossing now across the Bloomberg terminal. Texan billionaire Sir Alan Stanford has surrendered to U.S. authorities after a warrant was issued for his arrest. The 58-year-old already faces civil charges brought by the U.S. Securities and Exchange Commission over an alleged fraud worth $8 billion. Now, Sir Alan turned himself into the FBI in Virginia. This is according to one of his lawyers. It's not immediately clear what criminal charges Sir Alan faces. Paul will keep you updated on that breaking headline as we do. And we'll also have a JP Morgan forecast for you coming on later in this block. Paul?
Well, absolutely. Well, why don't we do that right now? Although that Alan Stanford story is clearly going to be fascinating. We're going to keep a close watch on that here on Bloomberg Television. Now, to JP Morgan, where strategists are talking about an economic recovery in the second half of the year. They've seen some indicators about that. Tell us more.
That's right, Paul. Economists at JP Morgan say that we are in the early stages of a global recovery, and the firm expects that that recovery will support higher equity prices. And one of the beneficiaries, the firm says, will be transportation stocks. Analysts at JP Morgan crunched the numbers, and they found that out of the last several recessions, transports have outperformed the S&P 500 in the first year following the market bottom, and analysts expect that this will be the case once again. So the firm's top pick for the second half, rail company Union Pacific. They're saying the company has the best outlook for pricing. Now, outside of transports, JP Morgan likes auto parts maker in the second half, saying that auto sales have now likely hit bottom, and the firm's best picks, Goodyear and Cooper. Biotech, also another area that could outperform, according to JP Morgan, once this healthcare overhang is resolved, however. And JP Morgan top pick there is Amgen. Paul?
That's the healthcare legislation overhang. Of course, it all depends, a lot depends on what kind of recovery this is, whether people just need to rebuild stockpiles and then run them down again as the economy continues to wade across the mire, or whether we get a full-fledged recovery, in which case often financials and tech stocks rebound. What are JP Morgan saying about those?
Well, absolutely right, Paul. And when it comes to the financials, the firm says it could still be a bumpy road for some of the large cap banks as those credit losses continue. But the firm does like asset managers. Their favorite bet in the group is Invesco. As the economy recovers, so will the stock market. And the firm says Invesco and other money managers stand to benefit. Well, as for tech, it may be a slower road back to growth. JP Morgan recommends sticking to those larger cap names, including Hewlett-Packard, IBM, and Apple. Paul?
Okay, Michelle, thank you very much indeed. More to closely watch over the rest of the year. Thank you.